Good morning and welcome to another Mortgage Coffee Talk with Maurice, Maxium Maurice, Dsoura, Mortgage Broker, Canada Express Mortgage. Just for disclosure, I'm also principal broker of Canada Express Mortgage Inc., license number 13241. Welcome, Maxim. How are you today?
Very well, sir. Thanks for asking.
Today's topic is about what is alternate lending. And let's talk about that. Can you explain a little bit alternate lending?
Yes, alternate lending, or as the word itself says, it's an alternative to any traditional lending. So when somebody wants a mortgage and they go to a bank and the bank declines or denies their application, their loan request, there are other lenders that may, be able to willing to lend that money to that customer. Now, what is that basically? In simple terms, this is an alternative option come to the bank financing. There are many different lenders that would their criterias are lower. We will talk about what their criterias are. Their credit request or their income request is quite reasonable compared to the banks.
Okay, that sounds good because in normal cases, our borrowers need funding and they may not qualify based on their current conditions that they can get funding from conventional lender, which is banks, normal cases, or and they have no choice but to secure financing. Normally, alternate lending is for short-term loans to accommodate some urgent needs of a client. So, what is the traditional lending as compared to alternate lending?
Well, traditional lending is, getting a mortgage from, let's say, a bank, like where the banks are offering the lowest interest rate, which is the most competitive rate that every homeowner or investor wants to get. Their loan terms are quite better. Like, even, if you look at their 5 year or a 3 year interest rates, they are quite reasonable. So you can definitely lock yourself for a longer term. Again, uh, and this is not advice. Just consider this to be an example because everybody's situation might differ. So when I talk about 3 to 5 year term, does not mean that everybody should sign up for a 3 to 5 year term. But when we compare it to an alternative versus a traditional financing terms are much reasonable. Something that the homeowners can, they will be saving a lot of money. They can make long-term decisions based on the market conditions and their goals. So yeah, I mean, if we had to look at traditional financing in simple terms, it's all the mortgages that the banks approve. Those are basically traditional mortgages.
Is consumer are aware of that when you are reaching out to your bank and asking for money, you have a long-term relationship with them. And there are some needs, urgent needs, such as trying to support your kids for higher education. You need a temporary short-term loans, and you have exhausted all your leverage to secure financing for mortgage or uh, other loans, and you will not qualify based on the OFC guidelines for financing. Therefore, they will have to be seeking alternative lending, and this is why it's very, very important to the consumer to know that the brokerage. Normally, when you're dealing with the bank, we as a brokerage, we also deal with the bank, don't we, Maxium?
Yes, we work with banks. So we work with many different lenders. Now, if I had to simplify, in the mortgage terms, so in a mortgage application, basically, there are three important factors, which which I call it, and there are many industry professionals who will call it as ICE. I stands for income, C stands for credit, and E stands for equity. So when we are talking to a bank, the bank requires the whole ICE. They want good income, good credit, and they want the minimum equity requirement. For example, in a case, let's say the minimum requirements for equity would be 5% down if you're buying a property, right? If you are on a refinance, generally, 20% is what we leave as an equity, 80% loan to value. C stands for credit, which the banks are generally looking for 650 and above. Again, 650 is not the standard that they need. It depends on other terms, but 680 is more preferred. 650 in case, if they still have something else like a good, strong income to validate. So now income, simple, when we look at it, it's GDS, TDS, gross debt servicing ratio, total debt servicing ratio. It has to be 39 and 44, right? So it's very clear, standard, simple. The ICE is what the banks look for. But now what happens if somebody does not have the ICE? When we say, they don't have a perfect ICE that the banks are looking for. So then we need an icebreaker, right? So in this case, we bring in the alternative financing, where there are lenders that will, that they're not strict on the credit rating. They can be as low as 500. We have options where even if I've done mortgages where a credit score was 455, right? There are options for those people as well.
And we're going to talk. We're going to talk about that. It says, okay, what are the advantage of private lending or alternate lending? And we're going to keep it brief so we are able to discuss all aspects of it. So, what are the advantage and under what circumstances alternate funding would be required or lending would be required?
Well, just as I was saying, the ICE, right? So income, for example, let's say somebody does not have the required income that the banks are looking for when they are calculating their GDS, TDS, right? So that's where we have alternative lenders who will be, they go up to, 60, some of them, or 55, 60 GDS, TDS, which allows even a low-income earning family to qualify for the mortgage that they need. When we are looking at credits, the banks are looking for a minimum 650 to 680. There are, alternative and lending options where, we even a 500 credit score or even lower exceptional basis. Not every lender likes to go below 500, but still there are options. And I have personally, as I explained, have done a mortgage of 455 credit score. So there are various factors that we need to look at. If somebody has good income but a very poor credit rating, it's balanced, right? And the same thing but there's one strict criteria. With an alternative lending, we need a minimum of 20% down. So when we are talking about the ICE here, the equity portion is the minimum that we need is 20%. So if anybody is looking to purchase a property and they don't qualify with a bank, they would still need to have 20% down when we are looking at alternative lending options.
Fantastic. Now, this is very important for people to know. When you are looking at alternate options, that means it could be reason that you need funding for your maintenance of your life because you may not have income and you need to have equity. So we have a couple of options. You have a reverse mortgage. You have financing, alternate financing for paying for your student loans or any debt consolidation. You might need funds for that. Now, this is a short term, and depending on the assessment, and that's why it's very important to you to provide information to Maxium, and we are there to assess it to make sure alternate lending is suitable based on your financial condition. And these assessments are made by Canadian Mortgage Brokerage because to make sure that Maxium is our lead broker, mortgage broker for our CMI, I call them Canada Express Mortgaging, and to helping people to understand that we are there to guide you. And there are also issues relates to brokerage fees. So maybe it's time to provide some clarity how the fees, the brokerage fees are charged with a conventional lending or B lending or alternate lending.
Definitely. So, brokerage fees. Now, when we are looking at traditional lending, now, if I can get a mortgage from a bank for one of my clients, I do not charge a fee. Now, a lot of people out there are unaware of this. They always think that the brokers charge a fee, regardless of whichever mortgage. That's not how it works. Now, a customer can walk into a branch and get a mortgage, all right, and not pay a fee. So then why does he have to pay the fee to a broker if he's getting a same mortgage? Like, for example, in this case, a client can walk into a TD bank and get a mortgage. And if I, as a mortgage broker, can get the same mortgage for him from a TD bank, why should I charge a fee, right? Why should a client pay a fee? So in this case, if I'm getting a mortgage from any traditional banks, there are no fees. But there are, when it comes to alternate financing, when we are looking at B lender options in this case. Now, a B lender option, there could be fees anywhere ranging from 50 basis points, which is 0.5% to 1%. Again, depending on the complexity of the deal and the time involvement and a lot of various factors. Now, when we are looking at the private lending in specific, there could be the rates could range from anywhere from 1% to 5%. Again, depending on many different factors. But this is how the brokers charge fee. Now, since you brought up the reverse mortgage, again, on a reverse mortgage, brokers don't charge a fee. Okay, so the mortgage lender in this case may be a home equity bank or Equitable Bank. They pay the broker the commission, just like the banks, the traditional mortgage financing banks do.
So I've just provided clarity is that when you are doing alternative lending, if the lender provide funding to fees to the brokerage, we disclose that and we don't charge money. But if it's a commercial funding or thing like that, we will have to charge fee. Also, for alternative lending, we also charge fee. So there is a lender fee and there is a brokerage fee because we are representing you as a borrower. So we charge a fee depending on the amount. Is a reasonable? We are not gouging people. We're trying to be fair and reasonable. And we understand when people are seeking alternative lending, they have a financial situation, they need help, and we try to negotiate the best possible deal. And a small fee is charged, which is disclosed before we receive anything. And, to maintain the transparency in the process. Most important thing that is very important for all of us is the disclosure, also clarifying the relationship that what we have, whether we're representing a buyer or the borrower or the lender. So we provide clarity, and then all documents that we arrange or review with our client to make sure they understand the commitment. There are some legal fees. The lender, private lender, lawyer fees are asked to be paid by the borrowers. And similarly, we always recommend a short-term solution. So we have an exit strategy after finishing up when you are trying to build a alternative lending. We have an exit strategy so we can move back to the conventional mortgage with the bank. Correct? Is that what we do?
That is correct. So mainly alternative lenders are always looking for an exit strategy. They want to know that how long are you going to hold this mortgage and how are you going to pay them back and what's their end goal? Because alternative lenders, there's one, when we are looking at especially private lenders, one thing that they want to know is how soon they can get their money back, because they are only offering private lending is only a short-term solution. I mean, I do know some clients who have had them for many, many years, but these are business owners. They need the money all the time, and they are making a lot more money, in income through their businesses, and they are okay to pay that kind of rate. But not everybody can pay that for. So when it comes to a traditional family, a couple, or low-income earners, there's something to understand that private lending is only a short-term financing solution, so that you can, if there's a credit issue, you can fix that credit. If there's an income problem, you've lost a job, you can go find a new employment. So these are short-term solutions, so that you can bridge that gap or you can bridge that need that you have for a temporary phase while you're establishing their financing, the criteria the banks or the B lenders have. So what I do here is, I always have that roadmap clear for my clients. Like, this is what we are doing now, and within this period of time, we are going to look at the next option and what do we need to do in order to get there. So I lay down those steps, a roadmap for my clients so that they can work on it, and it's a graduational process. There have been clients whom I've worked with over the years. They were with a private lender, then I put them with the B lender. From B, I've taken them to a bank. So I still remember, that deal specifically, one of the deals that I was working on, and they were with the bank, but life happens to all of us, right? And it was just hard on them, and something that really went wrong in their life, and due to which they had to get a private financing. And then that private financing they held for almost, I think, about just a little over a year they had to. But just once after a year, they got an open term. I think about 3 months they kept it open and they paid it off. But we got a B lender to qualify, and then gradually we ended up having them a year after with the TD Bank. So I know that this is possible because I've done it, but there are specific steps that we need to take in order to achieve these results. And I educate my clients at every step so that they know what exactly they need to do. And if they follow my advice, I can pretty much guarantee them that there is a graduational process from a private lender to a traditional bank.
Yeah, most important thing, viewers, is very important for you to understand that when you are arranging or we are arranging alternate lending, we go through very detailed the commitment letter that comes from the lender and pros and cons about securing that financing for you. So most important thing is remember that you're not only paying a lender fee, you're also paying a broker fee, whatever that amount is. It's outlined. The terms of the agreement is also defined. There could be a penalties for breaking that alternate agreement arrangement.
Yes.
So you have to be careful. Also, you have to be prepared to pay lawyer's fee because this funding is arranged for you only. Therefore, you are required to pay all the costs associated with arranging this alternate lending. And not only that, there will be a charge on your property that needs to be discharged when you pay off the loan. And this is why it's very important to watch this. And if your alternate lending is more than 75,000 or more, you need to have your own lawyer to review those documents. Anything below 75,000, you don't need that. You can use lenders. Idea is to reduce the cost. But if it's 75,000 or more, you need an independent legal advice. So we are here to help you to make sure you understand the process, what are the consequences, and the product is suitable for you. And we go through complete financial assessment to make sure you can afford this alternate lending. Because any default on alternate lending is similar to any default on your prime mortgage. You want to make sure this is a short-term solution and you are able to navigate through the challenges you have and you come back to conventional lending. So last minute, you want to say something, Maxium, and we will continue to have this conversation to educate our consumers.
Well, alternative lending options could be a good fit for a lot of people out there. The only thing I would recommend everyone is to work with a mortgage professional who understands private lending. In this space, specifically now that FISRA has also introduced different levels of licensing. Kindly note that you are working with somebody who is at least a mortgage agent level 2 or a mortgage broker, so that these people have taken the required education for private mortgage financing. Agent level 1s are not allowed to do private lending, but there are some agents out there who might have some knowledge and might share that information with you, and then get their brokerages or somebody else at their office to do process those files. I encourage you to not work with somebody who is not an agent level 2 for any private mortgage financing. The only idea to that is, no matter if they have their knowledge, but they technically, as per the regulatory requirements, they are not licensed to do so. And even if they have somebody at their office who is licensed and who can process that file for them, there could be a communication gap. Something that you told your agent, he might, there's an indirect speech that might have not communicated clearly to the other person. So I encourage everyone to do their personal due diligence in talking to the agents who are qualified to do these financing. And also, as Mr. Qureshi just advised, the commitment. It is very important to understand the mortgage commitment, because that's a legal binding agreement that you're signing. Then later on, if things change for you and if you want to exit, you want to have a peace of mind, because there are some lenders out there who charge discharge fees, and you would not know these fees when you're actually trying to get them paid out. So I have seen some discharge fees up to like $2,500, whereas there are lenders who just charge $300. So it is very, very important to know these fees and know. So again, I'm not saying that your 2,500 is not the right solution. What I'm trying to say is you need to know your needs, and those needs need to be matched with the right product, which I'm sure a qualified mortgage professional can do that for you. But feel free, in case if you ever have a private lending or any mortgage financing needs, whether it be residential or commercial, feel free to call me. My name is Maxium Maurice Dsoura. I'm a mortgage broker at Canada Express Mortgage Inc. My direct phone number is 437-353-9977, or you can email me at info@maximdesouza.ca. Thank you very much.
Wonderful. I'm a principal broker. My name is Tahir Qureshi. I'm principal broker, Canada Express Mortgage. My direct number is 416-451-3489, or you can call 905-785-9926 if you have any question, or you can call Maxium directly. He's our lead broker in our brokerage. And I hope that you like it. We appreciate your feedback. Our next episode will be about equity financing or down payment possibilities with lenders. So until then, thank you very much for watching. Please provide your feedback. Bye for now. Thank you.